Good morning. It's Harvey Jackson. Just going to get through some news items here. Will China buy soybeans for their stocks? So the state agencies, are they going to buy the stock or soybeans for stocks? Because it seems like uh, the the commercials are pretty full with stocks, and margins are down. And Clownshow Carney thinks higher taxes makes us, not U.S., competitive. China soybean glut could defeat U.S. exports. Hopes for trade thaw. I'll just read some of the highlighted here. China is grappling with a glut of soybeans after months of record imports, curbing prospects of U.S. exports despite recent trade truce that Washington said included a pledge by Beijing to resume heavy purchases. Traders and analysts warn that the vast stockpiles at ports and state reserves, coupled with weak margins, limit Beijing's appetite for further purchases. Even tariff waivers margins remain negative, and Brazilian soybeans are still cheaper. There's a point here where they're talking about the total stocks in the ports. It's just there's 10.3 million tons at ports, and it's still possible that it's stated right here. It's still possible that we could get large purchases, but it has to be COFCO and Sinograin, but they would have to resume and put it into their stocks. But there's no problem getting and using the stocks that they have with a decreased margin. Uh, Basically, just talking about the same thing, but just yesterday, I think it was they COFCO sealed $1 billion Brazilian soybean palm oil deal worth 20 million tons worth at $10 billion. Uh, just a just a different article here, just about the world oil and gas demand could grow until 2050. The IEA, which is the International, again, stupid acronyms, International Energy Agency, mostly funded by the U.S., finally changed their tune to follow some of the change of policies in the U.S. And if there's anything that's good to come out of this, is the change in policies by these stupid bodies. Are going to give the potential for more investment into the oil industry. And the reason that you can't get anything done is because there's such a sour taste to be able to invest or long-term investments. So as this gets stretched out over time, all the better for investments going back into the oil industry. Uh, Here's Mark Nixon, and government.x just talked about a couple different things here, but Mark Nixon uh, just just was saying here that, how does the industrial carbon tax actually make things more competitive? And just a similar kind of following down the taxes line here. Mark Carney says the budget will put $3,500 into the pockets of every working Canadian over the next 5 years. Great, because the average Canadian pays $15,000 a year in tax to the feds. So over 5 years, they'll take $75,000 and return only 3.5. Oh, that's a great plan. Thanks, Carney.
Well, there's women trade war with the United States and the industrial carbon tax.
Um, so I just asked one of the artificial intelligence, just asking about uh, the carbon tax and paying carbon tax, and how does it make it more competitive, and it just highlights that why companies might move. Yeah, and that's exactly what's happening. Companies are moving from the higher tax regime in Canada and going to the U.S. because they got lower taxes and lower um, restrictions. And you got to jump through hoops to be able to get money from the government. So a little bit of potential moisture showing up in the western part of Saskatchewan. Looks like it's going to be quite warm in some of the U.S. states here after a cold freeze that went across there. This is just a snapshot of some of the snow taking us all the way out to almost the end of November. I had a few people talk about this area that I put into the map here yesterday, and the reason I only put this one and not this one, because I what it's talking is percent of normal. And if you have an area that is, what is the years that you're using for normal is the question. I just don't like using the percent of normal. I would rather total soil moisture, whether we're in a drought or not, because if they've shortened up the timeline, that is actually what they consider normal. So if there's 5 years of drought in this area, this looks okay. Oh yeah, that's almost normal moisture. Well, that's horse crap for sure. Anyway, canola down $4. Rapeseed just slightly down. Um, Soybean oil down 0.18 cents a pound. Crude oil down 70 cents a barrel. There's trading at 60.34. Soybeans up $1 or a penny and a half at 11.28 right now. Spring wheat down a couple cents. And your hard spring wheats and your Chicago wheat is down like 7 cents. Milling wheat is unchanged, and oats down, and corn is just basically unchanged. So just having a look at canola, you can see that it's still trading kind of sideways here. What I did here is just look at a 30-minute chart, or a 1 month and 30-minute chart, and what does that look like when it broke out of that channel? And we're still making not definitive making any higher highs here. So just that is not a breakout pattern for sure. So your November 26th canola futures still looking at this pricing new crop here, just because of the heaviness of the amount of potential canola that's going to, or I'm going to say all oil seeds going to get planted in the world. It looks like it might be the only profitable crop, especially if it's deciding whether you're in a Europe or Black Sea, where majority of your wheat or your winter planting is wheat or rapeseed. You might plant more rapeseed rather than wheat, because you cannot pencil in a profit at all on wheat. Here's your rapeseed price. It's did pull up a little wee bit here, but it's still not breakout uptrend here yet either. Soybean oil futures basically still in this downward channel going down, and yet you look at soybeans, it definitely had that big leg up. Here's your leg up, and still looking like it's going to try to break out here when you look at the 30-minute chart. Palm oil futures consolidating, going sideways after a big drop here. Crude oil looks like it could actually break out lower here at some point as well. The Canadian dollar, it's caught in between these blue and the orange line here. But when you look at the 30-minute chart, I'm not certain what direction it's going to be going here, but you've got all of the moving averages below the current area that it's trading. US dollar index, it's been down since the beginning of the year. Let's have a look at wheat. Spring wheat has broke out. There has been some analysts out there talking about making some sales there, and sure doesn't feel really good there, but it is an opportunity to maybe get some sales put on, because it takes us all the way back to area back in September when we've seen these same prices. Kansas still looks like it's respecting that downward trend. Same thing with the Chicago as well, and your milling wheat. And your corn futures, depending on how you draw that line, it does look like it could try to break out here, but here you can actually see that you're actually making lower highs even in the 30-minute chart. Quick look at cattle, nice leg up that we've seen after a big down day. Still looks like it could try to recover part of the losses that we've seen from up here. Same thing with the feeder cattle. If anything, I would say the hog futures look like they're going to try to break out and get into that range as well, middle of that range. And it's not November 10th, but it's going to be November 14th. We're going to have our USDA.